Hello and welcome to this Forex Preview at xm.com. I'm Maria Bashardis, and joining me is lead investment analyst Rafi Boyadjian. We'll be discussing the upcoming FOMC minutes and the potential reaction in the dollar. So Rafi, even though the recent inflation print came in far higher than expected and shocked markets and investors, it doesn't seem like the Fed is worried yet. What are we likely to get from the FOMC minutes due on Wednesday?
Well, Maria, we're likely to hear more of the same from the Fed. They have, in fact, been pretty consistent with their message that they want to see further substantial progress, and we're probably going to have that message reiterated in the April meeting minutes. We did see a number of Fed speakers since that inflation data, and it appears that nothing really has changed even after that very strong number. And the Fed has been, really trying to get its message across to the markets that it will take some time to achieve substantial further progress, and the recent bad data we saw from the first jobs report and then the retail sales figures, that pretty much confirms what the Fed has been trying to say all along, is that the recovery will be bumpy and a full rebound is still a long way off. And of course, the current surge we're seeing in inflation, that's going to be transitory, that towards the end of the year, those price pressures should begin to ease. So on the whole, we're not really expecting anything new to be revealed in the minutes.
We've seen the US dollar slump to near 3-month lows this week. Can anything positive come out of the minutes for the dollar, or are more losses in order?
Well, surprises are unlikely, given how consistent they've been with their language, but it's still possible that perhaps we could see one or two hawkish members perhaps making a point, if they did make the point at the April meeting, that there is a risk that inflation will not be transitory. We could see one or two members perhaps pressing the other policy members to begin discussion on tapering pretty soon. We do have one non-voting member, Robert Kaplan, who's been on the more hawkish side recently, but on the whole, he seems isolated and there aren't other members supporting his views. And although markets, although they are convinced that the Fed will stay on hold for the foreseeable future, they are nevertheless worried that some of this transitory inflation will become sticky. There's a real concern that price pressures from, say, supply chain bottlenecks, and of course we're still seeing some shortages as well of certain materials, that's causing price hikes as well, that some of this type of price pressures will become permanent. So if we were to get the slightest hint that some policymakers are becoming more worried about this too, then that could spark a massive jump in treasury yields, which in turn would of course boost the US dollar. Otherwise, it is hard to see the dollar out ending in the very near term if the Fed stuck to the script and repeated what it's been saying all along.
Rafi, thanks so much. And thanks for joining us at xm.com.